The Fed has been extremely accurate in their actions and in their views, and they've actually been doing very precisely what they've been communicating that they are about to do. Basically, the Fed hasn't done any mistakes since 2021, since they realized that they truly made a major mistake. So I am going by the fact I'm betting on the Fed being right. That's what I'm betting on.
Hello, I'm Michelle Makori. Thank you for joining us. The US economy is not going to hit a recession, at least according to yet another closely watched gauge of economic activity. The Conference Board's leading economic index is signaling for the first time since July of 2022 that there will be no recession ahead. Well, my next guest has for a while now maintained that we will have a soft landing, saying that the upcoming recession, if any, has been the most widely predicted recession in the history of civilization. Therefore, both markets and economic actors have front-run it, which by definition reduces the probability of it happening and its magnitude if it does. Alex Krüger joins us now to share his thoughts on the economy, the markets, Bitcoin, and his top crypto picks and more. Alex is an economist and partner at Asgard Markets with over 2 decades of experience in commodities and global macro trading. Alex, thanks for joining us. Good to have you here on Kitco.
Thank you, Michelle. Thank you so much. Thank you for having me.
All right. So, Alex, the US soft landing or no landing idea that seems to be gaining more and more traction, very different sentiment from what we were hearing about 6 months ago. Although you did actually about 6 months ago predict that this would happen. Let's talk about what we heard from the Conference Board initially, July 2022. They warned of a recession based on the index's performance, but recent economic indicators, including sustained job growth, consumer spending, have not aligned with those predictions. They've now changed their outlook, but they are still expecting growth near zero in the second and third quarters. Now, as I mentioned a while back, you said that this is the most widely predicted recession in the history of civilization. Therefore, it's already been front-run in a way. So expand on that and give us your current macro outlook for the U.S. economy.
That was something I wrote and sustained back in June of 23. Mm-hmm. And there is really not much else to say. It's been clear since mid 22 that everybody been talking very, very convincingly about how a very massive recession, given what the Fed did, was unavoidable. And if you think about it, if you think how economic actors behave normally is when we expect something, we start adjusting towards that happening. So we start reducing our spending, we start laying off people, we start making the necessary adjustments for that to happen. Therefore, the probability based on that analysis of having a recession was low the way I saw it, and I still see it, but it's not really that relevant anymore because now things are looking actually quite good. But the point was the pain gets spread through time. So, that's something.
Is there anything that derails this for you now? You're pretty convinced that we're not going to have a recession in the US, meaning by the technical definition, we will not have 2 quarters of negative GDP growth. If we're going by the textbook definition, what could potentially derail this?
First of all, black swans or quote unquote black swans, things such as that I really don't see happening, but that's why we call them black swans. It's civil war, armed conflict in the Korean Peninsula, or something happening between China and Taiwan. Or inflation, same thing, conflict escalating between Russia and Ukraine, again, doesn't look like it's happening. And on those aspects, it's something that I think is very important, at least for me as someone who manages risk and makes a living out of this, is when black swans happen, when things very bad happen, like the Corona crash, we usually have enough time. Things are so bad that we have enough time to react and adjust our positioning so we can withstand the pain. So we don't need to predict the black swan.
But, you mentioned a couple of black swans that, we're already sort of contemplating them to a degree by virtue of the fact that you've mentioned them. Geopolitical tensions are very high on everybody's concern list because there's so many potential hotspots that could flare up. So are you trying to say that if we're already in a way anticipating a black swan of the kind that you just mentioned, now granted we don't know which one or how it plays out exactly, that it's easier to position for it?
Not really. Most of these events are really, really big. They don't matter. Like for example, conflict in the Middle East. At least Saudi Arabia gets involved, and oil supplies get affected significantly. It doesn't really derail the U.S. domestic economy and doesn't derail the U.S. stock market in aggregate. Now, what we saw basically a couple of months ago was Israel and Palestine. There was a lot of stress about it for humanitarian reasons, but for U.S. economy and U.S. markets, it didn't really matter precisely because Saudi Arabia didn't get involved almost whatsoever. The other thing that I think is very important, but at the same time it's I don't see it happening, is inflation actually not cooling down, but instead, accelerating. So if we're looking at CPI, usually best to look at CPI rather than PCE because it has it comes 3 weeks before PCE. If we look at inflation on a month-on-month basis coming in very hot once, and then if we see it a few times, then the outlook should change because the Fed's outlook will change if that happens.
Okay, so you're feeling pretty confident that the Fed has inflation under control at this point?
I'm feeling very confident. It's not really sexy, but this is it's not really what gets people excited, but I think it's what makes people money. I feel very confident that
so that what
things that
go on
that interest rates are as expected. Start going down later this year. I'm on the consensus camp, basically starting in June, 3 cuts. Inflation continues going down. The U.S. economy does not see a recession, and therefore, that being the case, the way to approach the market, at least for me, is to ride the wave. So this is a moment for me where you sit on hands. As I was saying, was chatting about this just recently. This is a moment in the market, actually, at the same time, where if you are, like we've run so hard, both on the AI front and the crypto, that those of us who are long, actually, we are very tired. Actually, tired. It's tiresome to see things do so well. And if you're not positioned, you are extremely conflicted, and you actually want the market to crash. But it's this moment, this kind of market where actually the most difficult thing is to recognize that you have to just sit on your hands and try not to read too much into things. Even the Fed is telling us very directly that they don't really care about a single economic data point. They want to see the trend. So if they're not reacting and not going to overreact, neither should we.
So your thinking is ride the wave, that somehow managed to kick the can down the road, as many would argue, and that there isn't going to be any major economic disaster in the next year. The markets aren't going to crash. The Fed will succeed in getting inflation under control without breaking the economy. And things are pretty much going to be hunky-dory, peachy keen.
There may be, but probabilistically, it's not a good idea to bet against it. Right now, it's for the last, say, 10 days, I think that the market is, I think NVIDIA earnings may have just changed everything because they were extremely good. But that being said, I've been of the view that basically we have a local that things are getting a little bit too heated up, both on the stock side, on the crypto side, which warrants, at least for me, taking a little bit of risk off the table. Which, by the way, I just put it back on the NVIDIA earnings. So,
okay, so you were watching NVIDIA earnings very closely to see if there's signs of overheating, both for the stock market, equity U.S. markets, and Bitcoin. So let's analyze that. I mean, what do we know? We know we just got the earnings right now. Record revenue up 265%. On the booming AI business, they beat on the bottom line and on the top line. What's your takeaway from what these numbers indicate? What does it mean for you? You're saying you put your risk back in on the market.
I look at price when this kind of event happens, rather than the actual numbers. I want to see how the market reacts to the data, rather than the actual data. It's way more important, the reaction. The reaction was extremely positive. Basically, everybody who is short-term got stopped out. The stock price went up 3% right away. Then it dumped 6%, and then went up 10%, and now it's flying. This is exactly the kind of price action you want to see. There is kind of like a short-term bear trap, and we were coming out of a correction for the last 10 days or so. So this is very positive. Yeah, this is not about also the economy. This is about the stock market. It's everybody. We are looking at NVIDIA, and when it comes to crypto, even though stocks haven't mattered as much for quite a long time, since the ETF came up, correlations started creeping back up on shorter timeframes and on crypto as well. Since Bitcoin is about 50,000. Positioning is a little bit overstretched. You can tell on funding rates that the market is heated up. So we stopped moving up. So I had reason to be concerned about 50K getting flushed down, and a few other things also getting flushed down. And in crypto, a flush down can be very fast and significant. So sometimes it's worth it to hedge.
All right, but before we get further into your outlook on Bitcoin and crypto, I want to keep it back to the US equity markets now. So this NVIDIA earnings and the market reaction, it tells you what about a sustained rally in the US equity markets? What does it signal to you now?
The party continues for a little bit longer.
So new all-time highs, potentially here.
Yeah, quite likely.
And what's a little bit longer?
I mean, I have to say, sorry, it's not a bold call, right? All-time highs are around the corner, so it's a pretty easy thing to say. All-time highs, just all-time highs. Nothing. It's quite boring. It seems to me that things will continue going higher
for the next, I guess, year or so. I mean, until we see any kind of different Fed action. What would sort of derail this again, other than a black swan event?
Yeah, the economic data, the economy, inflation, basically. The one thing that can derail this, the one thing we should be potentially very concerned about is inflation.
Right, but you just said you think the Fed is going to maintain, has been able to tame inflation.
Yeah, the thing is, the Fed has been extremely accurate in their actions and in their views, and they've actually been doing very precisely what they've been communicating that they are about to do. Basically, the Fed hasn't done any mistakes since 2021, since they realized that they truly made a major mistake. So I am going by the fact I'm betting on the Fed being right. That's what I'm betting on.
Don't fight the Fed. You're betting on the Fed being right.
Yeah,
so you're anticipating a cut in June then?
Yeah. It's again, that's not a bold call. It's actual consensus. But yeah.
Right. Yeah. So you're expecting a cut in June and significant upside left in the equity markets.
Yeah, and I like to say here is it's more important like anything I'm saying. This is not really exciting. I'm just saying basically number go up, things are okay. And
okay
I
is
think
good. Okay is good news. Numbers go up is good news, Alex.
Yeah, exactly. The main thing I like to like my view right now is we should be trying to ignore the noise and focus on the bigger picture. It's very easy to get very concerned about small things flaring up here and there, and that's how we get out of the wave, and then we are just watching, right? Which is not fun.
So what would you say is the noise we need to ignore, and what would you say is the bigger picture we should be focusing on?
Well, for example, if you go on Twitter and you go on the media, which usually feeds of Twitter, you're going to see that there's a very large percentage of market participants, either risk takers or not, who are very much focused on how expensive things are, on how AI is a bubble, on how on a PE basis stocks are very expensive, how the yield curve inversion has to lead and end up in a major recession and in a major crash, how the Fed pivoting has to lead to stocks crashing, things like that. You see there's a lot of that going around, and there is a lot of people that basically they make a living out of relaying these concerns, and people like to click on those kind of news. I get this all the time. People asking me about news. It's like, what do you think of this? What do you think of this? And usually my response is noise.
And the bigger picture then, that we should be focusing on?
Bigger picture is, again, interest rates going down, inflation going down, liquidity going up.
And what about the bigger picture, Alex, that some would say that this whole thing is actually, unsustainable in terms of the fundamentals being so divorced from the market sentiment, that the economy is not as solid as it appears to be, that the data is all artificially stimulated by the Fed and by money printing, and that this whole house of cards is bound to come crashing down with the US debt levels at $34 trillion, and that's unsustainable. That bigger picture, what do you say to that?
Well, usually people we have that bigger picture in mind have been saying the same thing for the past 15 years and being wrong regularly and consistently. So that take clearly is wrong. The economy is working fine and stocks going up. And on the fiscal side is definitely unsustainable. But if you look at debt to GDP, for example, actually the ratio is actually going down. So it's not all bad. Things are also improving on the fiscal side. The Fed is aware and has been communicating very regularly for the past year, not before, but it started about a year ago, that the fiscal path is unsustainable and things need to change. That's okay. That's another potential source of a source that could trigger a major market crash. It already happened once, and it was the first time in decades that it happened. When last year, early August, we had basically the long end of the yield curve just spiking up and literally going out of control, as there was a few events that happened. And that triggered a very large stocks correction at the end of the summer, right? That could happen again. I don't see it happening for now, but it could definitely happen again. I think it's more likely for the long end actually to come down with the short end of the curve, as people in the market basically they start pulling money out as rates go down. They move from the short end to the long end, and they want to lock in higher rates. So again, excuse my optimism, but I think it's less likely. The most likely case is for rates and also mortgages to come down. This is going to be good for housing, and yeah.
No, we like your optimism. It is refreshing, and I like it. Alex, what about the idea that, okay, sure, even if the Fed cuts by, 25 basis points in June, even if we get like a 1.25 cut for 2024 total, we're still going to be at really high rates, given that we're 5.25%, 5.5% now, and that there's so many things in the economy that can't handle rates that high. For example, commercial real estate. For example, some of the smaller banks. Sprinkle
That's
some
true.
optimism onto that, please.
There's no optimism there. I'm sorry. That's the way I see that is those are not, they don't represent a systemic risk. They're very isolated. Commercial real estate doesn't directly translate into residential real estate, and regional banks are not the largest banks. Definitely have problems. The banking industry has been a mess forever. If you're betting on a reversal in banking stocks, I would pray for your soul if I were religious. It's the issue with higher interest rates is that precisely it uncovers and it exposes rate-sensitive sectors of the economy, such as commercial real estate and banking. I'm not optimistic there whatsoever.
But not a systemic risk, not anything that you're saying can bring the markets crashing.
I don't think so. And if you are, the thing is, okay, something else I'd like to say, it's that I think we should be thinking of the Fed right now as the Fed put is back. The Fed put was removed from the market in early 22, basically in January 22, and then once again at the end of March 22, they made it very clear we're not going to save the market. Where our focus is now on inflation and inflation only. Stocks crashing. Well, they didn't actually say this, but stock crashing actually helped the Fed's job. Things changed in December when the Fed stated for the first time in a very long time that the risks, the balance of the risks are balanced to both the upside and downside, and they're focused on jobs just as much as they are on interest rates. So what that means is that the Fed put this back. If things collapse or start collapsing, the Fed will intervene. And we already saw it last year in March when a couple of regional banks went under. The Fed intervened very effectively. And for those who are into crypto and Bitcoin, it's kind of a situation where you win or you win. It's a win-win. If regional banks collapse, there would be quite a significant increase in demand for Bitcoin. And if they don't go down, we just continue this up-only mode, right?
Again, before we get into Bitcoin, you did make an interesting comment in one of your posts recently in the context of the economy. And you wrote, and the economy and the Fed, contrary to popular belief, liquidity is not the main driver of asset prices. It's all about flows, not liquidity. Positioning, rates, liquidity, growth, valuations, and expectations are what drive flows. After all, liquidity is a snapshot while prices are forward-looking. Can you break that down for us? Explain that.
This is something I wrote about like 10 months ago, maybe. And the point there was basically countering the fact that the widespread belief that is kind of new, that liquidity drives everything. And liquidity is just another variable. So for example, I said liquidity was one of the reasons why I'm bullish, but it's just one of the reasons. It's not the main variable. You can have, and it's happened many times in history, where actual liquidity in aggregate is going down, and stock markets continue to sustainably go up in time. So the point on that is to not focus in a single metric to try to drive our decision making and justify our biases. I think that.
All right. So there's been too much focus on liquidity with people analyzing what it means for the markets and for assets.
And that started basically in 2020, right? It started with right after the Corona crash, with the changes the Fed did.
Right, and then we obviously, had so much liquidity in the market at some point, which is how many would say we got to the valuations that we're at now. You talked about Bitcoin, so let's now dig deep into Bitcoin. Bitcoin trading, near 51,000 today, slightly down. Up about, 17% in the last 2 weeks, up around 28% last 30 days. Bitcoin's market cap is now back over $1 trillion. We saw crypto exchange traded products with a record of $2.5 billion of inflows last week. Bitcoin funds now responsible for 99% of all the inflows. That's according to CoinShares. So, I mean, what do you make of this sudden pop that we've seen in Bitcoin above that 50,000 level, and can it sustain it in the near term?
It's been driven by ETF flows.
Yeah.
ETF inflows right now, year to date, are about almost $6 billion. That's a lot, and that's net of $6 billion of outflows from Grayscale. If you think about it, Grayscale outflows eventually will evaporate, and you are just left behind with the ETF inflows. The way to think about it for me is, once again, trying to take a step back and look at the bigger picture and understanding that the ETFs are a game changer, where one of the two most important things that could ever happen in the history of Bitcoin, one is traditional finance embracing Bitcoin and marketing it to the masses. And the other one it's not yet, won't happen for quite a while, but it will eventually happen, I believe, is central banks doing some things and doing the same, basically embracing Bitcoin, adding it to their reserves. And by doing so, as well, promoting Bitcoin.
Okay.
I think it's just getting started. That's I think is sustainable. I think is what happens. There's something you can see on Bitcoin. It has a tendency to overheat every now and then, and when it overheats, it becomes very hard to keep on going up. It's very easy for those who are not in crypto, if you're from your audience, that crypto has something very unique, which is basically funding rates of perpetual futures. We call them perps. So by looking at the funding of perps, you can have a very easy feel, quantifiable feel of how stretched the market is and if the move is sustainable or not. So, for example, when the market was hot into the ETF launch, was extremely hot right after, and once we started correcting, was mostly driven by Grayscale outflows and the narrative around it, like crypto natives believing that we should be going down much further. So herd behavior. And once we got to 38,600, that funding flipped, and it's been quite bullish until 50,000, and then it changed again to heat it up, to put it in a way. So that's kind of like the wall of worry. Sorry, go ahead, Michelle.
So explain to our viewers that aren't familiar with what happened with the Grayscale outflows, why that was a negative right after we had the spot Bitcoin ETFs and the premium that Grayscale was charging. If you could just break that down for our viewers that weren't aware of that.
So Grayscale, first of all, it's this used to be a closed-end trust that converted into an ETF. It had and still has very significant AUM. And they decided to charge 1.5% annual fees on AUM, when all other ETFs are basically charging between 20 to 30 basis points. So any rational investor who is in Grayscale wants to get out into other vehicles, even though that may trigger a tax event for you. That on one hand. On the other hand, it's very significant, very large estates, like, for example, the bankrupt FTX or Celsius or etc. There's quite a few that had very significant positions of Grayscale stock that once it converted into ETF, liquidity came in and they finally were able to exit those positions with high liquidity. So we had these massive outflows, both from people reallocating from Grayscale to, say, BlackRock, and the people just exiting finally. They've been waiting for years to finally exit Grayscale, and so they did.
All right, and now we're seeing that balance out, and we're seeing the outflows balance out with the inflows into these spot Bitcoin ETFs. And are you seeing 50K as a major support line to watch out for right now?
No, not at all. No, it's a round number. So and funding is still a little bit hot. So for me to feel confident that 50K is going to sustain, I need to see, for example, something that I could expect. Say, Bitcoin goes up to 55, and then it drops back down to 51 in 6 hours, like in one of those flash crashes that we see often. If that triggers funding going very negative, then I could see it sustaining. But for there to be support, we need funding to change, positioning to change. Funding is an expression of positioning, basically. I do expect all-time highs by year end, but how we get there, I don't know.
Well, we do have the halving coming up, which could certainly propel the case for all-time highs, new all-time highs by year end. And what that's expected to happen around middle of April, right? April 18th, give or take, more or less.
Yep.
And we'll see the reward for mining a Bitcoin block decrease from 6.25 Bitcoins to 3.125 Bitcoins per block. What impact do you see that having then, come April?
It's a bullish event. It's also a very important narrative that the marketplace likes to push. So it's definitely bullish. How bullish we shall see. I think the ETFs are extremely more important, but these two things work in line together and they compound. So it really helps people believe that price will continue going up. And if the majority believes so, then we have a tendency to, if everybody's not long, there's market tends to basically continuing. We kind of like, we stay long until we don't. It's especially Bitcoin is very herd driven, so it's really a state of mind. And the state of mind right now is extremely positive.
Yeah, very much sentiment and consensus driven. So you're quite confident that Bitcoin will exceed the 69,000 all-time high by the end of this year?
I think it's very likely.
Okay. Any other price forecasts you care to share regarding Bitcoin? I know you're not an exact price forecast guy, but anything you can share that you're feeling quite likely about?
Again, I'm quite aware that it's not what people want to hear. People want to hear things that get them excited, such as Bitcoin is going to hit 150,000 by March because my model says so. And I have a few models that basically give me a price target. I think it's not the way one should trade, and that's only something you want to do if you're actually trading options. If you're trading options, you do want to have a price target in time. Otherwise, it usually costs people money because prices tend to run way more than what we think they're going to do, especially in momentum-driven, herd-driven assets like crypto assets. All
right. Okay. So you don't have a specific nearer term forecast other than exceeding its new all-time high by the end of 2024. But I do want to circle back to this comment that you said institutional investors, correct me if I'm wrong, you're suggesting the gateway to central banks now moving into Bitcoin at some point.
No, not the gateway. It's sorry to interrupt. Go ahead.
Yeah, I mean, you're not the first guest that we've had on Kitco to suggest that once the traditional financial system embraces Bitcoin, it's a matter of time before central banks start to accept it or see it as some kind of reserve asset. But I want to hear you explain your thesis on this.
Yeah, well, central banks they're not solving for performance. Their job is not to outperform any benchmark. Their job is to manage the economy responsibly. So at the moment, Bitcoin is an extremely volatile asset that doesn't belong in the reserves of a central bank. But eventually, with time, that volatility, with time and higher market capitalization, that volatility will collapse. And that's also that we're going to see that another variable that is going to have volatility collapse is the institutionalization of Bitcoin through ETFs. There's going to be an increased options volumes. And I think we're going to see basically a lot of volatility compression because of new market participants in the options market of Bitcoin. Point is, eventually, once volatility, and it's not like a binary event like the ETF. It's like it's not there, and then once it's there, it's progressive with the passing of time. As market capitalization goes higher, volatility goes lower and compresses. Eventually, if it's a very strong view that many people share that are in Bitcoin, central banks will adopt Bitcoin as a reserve asset. Why? Because they have gold, and Bitcoin is the gold of the new age. That's what Bitcoin is. It's like it or not. I know it's very debatable and generates a lot of heated reactions talking about Bitcoin as a store of value, given how volatile it is and how it can drop 70% in a year. However, that's just for now. And once we get beyond the volatility, the adoption phase, it makes sense for central banks to finally see Bitcoin as digital gold.
What kind of timeline do you anticipate this playing out in?
Something like 10 years. Definitely not within 3 years. And Argentina or El Salvador or Nigeria getting into Bitcoin actually have very little bearing on those who matter, like the US. So
what would be a central bank of consequence that you see taking this move, and why would a central bank take this move?
Why? Because why is because it's a better form of gold. That's why. That's what it is. And central banks that matter, it's basically the Fed, the ECB, the BOJ, the PBOC, and nobody else.
So are you seeing Bitcoin as, you're not necessarily saying you're seeing Bitcoin as a new kind of standard with,
not at all.
Fiat currency pegged to Bitcoin, because that would limit central banks' ability to do what they need to do, just add it as a reserve asset that central banks hold alongside gold.
Correct. In small quantities, in very small quantities. That's how I see it. I'm not at all in the Bitcoin standard camp. I think it's very short-sighted. That ignores the fact that the world economy works around dollars, and most people in emerging markets, what they want is dollars. They don't want Bitcoin. And it will be very, it's I don't know if we want to get there, but the Bitcoin standard doesn't make much sense, to be honest, to me.
So you're still seeing fiat, potentially the dollar, as the global reserve currency, but with central banks shifting towards adding Bitcoin and gold as reserves more than dollar-based assets.
That's correct. Yeah.
Okay, and in a timeline of about 10 years or so.
That would make sense.
And then, of course, what would that mean for an approximate price forecast in dollars for Bitcoin in that time horizon?
Well, you can quite easily get to the point of expecting Bitcoin at 1 million if you expect similar kind of adoption from institutional investors and the public sector. It's very feasible. At the same time, it's as all asset prices go up, inflation goes up, numbers, every single number, unless you're talking about forex pairs that have no trend, everything has a trend. So at the end, putting out a number, even say 10 million, it's kind of like that's easy because it's predicting something that is guaranteed to happen. It's like saying, oh, it's going to rain at some point in the next month. It's the same thing as saying, okay, the S&P is going to hit 10,000 at some point in the next few years. It will happen.
Well, I mean, there are those that still think Bitcoin could still blow up into nothing. You know, they're getting fewer and fewer, but you do have those out there, Alex, that still believe Bitcoin is a bubble. And the inevitability is that it will disappear. Not me,
Yep.
to be clear. I mean, viewers of Kitco know that I personally like Bitcoin and I like gold, but we certainly have those that believe that it's not a definite that Bitcoin is here to stay, that we haven't had enough of a time span to be that confident about it.
Yeah, I understand the misunderstanding I understand the mindset of people who think that way. Unfortunately, they're wrong, and the market is telling them they're wrong, and that's more important than we believe. Is what is the market is doing. If it keeps on growing and it keeps on attracting more people and more capital, it means that something is going on there that it's important, and we should actually pay attention to it. For Bitcoin to disappear, it needs to get hacked very badly. It's
right.
There's always going to be demand for it because there is a small group of people that believe in it so firmly that will never let it go down beyond a certain point.
So on that idea of the people that believe in Bitcoin so firmly, much of that is driven by this notion that Bitcoin is supposed to be an alternative to the traditional financial system, that it is supposed to be decentralized, that it's supposed to represent a way to independently control money away from the debasement and devaluation of fiat currencies. And there is concern that when you start to bring the traditional financial system into Bitcoin, that in itself is contrary to the decentralized and independent mission of Bitcoin, that the idea was to move away from the system that Satoshi Nakamoto saw as flawed. And when you've got players like BlackRock and the world's largest asset manager and all of these other giant asset managers and institutions having centralized control of a big chunk of Bitcoin, which of course you need if you're having custody of the asset for a spot Bitcoin ETF, you're moving away from the idea of Bitcoin being held independently. You're moving away from Bitcoin being an alternative to the system, being used as a medium of exchange or a currency, because it's not if you're holding a share of a spot Bitcoin ETF, that in a way it takes away from the decentralized money mission of Bitcoin. I've made this point several times because it is for me something that's philosophically very interesting. I'm curious what your thoughts are on this.
Well, BlackRock doesn't own the Bitcoin. It's a custodian.
Right.
Legally so. Therefore, it doesn't truly affect decentralization, even more so given that Bitcoin, like other crypto assets, does not confer any kind of governance to the holder. So the fact that it's BlackRock or Fidelity or whoever holding all this Bitcoin for somebody else, it doesn't really matter that much. It doesn't change the bigger picture. It doesn't change the decentralization of Bitcoin. You could say that about ETH and ETH being held by certain parties who basically then use that ETH to validate the network. It's not the case for Bitcoin. Yeah.
But I get that point, but does it take away from the idea that it's a medium of exchange, right? It's no longer functioning as a medium of exchange if you're holding a share of a spot Bitcoin ETF. Does that detract?
It's semantics.
So
that's people who have too much time to think about. Like, it's like people who are like trying to find something to get concerned about and get upset about. That's simple semantics. It's a very sorry. Yeah.
Is the idea that you now potentially have all of these like spin-offs and derivative products coming off the asset, the core asset of Bitcoin, does that compromise the beauty and the purity of Bitcoin? What do you say to that argument?
It makes it better. It's the bigger the economy built around it, the better for the Bitcoin economy. It's a positive development. I understand the mindset of the so-called Bitcoin maximalists who think this is an attack to decentralization and what Bitcoin stands for. I think that's very short-sighted.
Okay, so not a point of concern for you. You mentioned ETH. I want to get your thoughts on ETH very quickly because I know that you are quite a strong proponent of ETH, Ethereum as well in a portfolio. It did hit a high of the 3,000 for the first time since 2022, up about 20% in the last 2 weeks. What are your thoughts on what we can expect from ETH, an ETF potentially? Give us your outlook.
It's very hard to determine what is going to outperform going forward, if Bitcoin or ETH. It's very hard. Therefore, what I would recommend, without giving financial advice, and what I do for myself, is I hold both. I adjust the weighting on a very regular basis, but at the end, hold both. And I think for those thinking long term, it's best to hold both. When it comes to what comes ahead, you can argue positively for each of them to outperform. I think Bitcoin is more likely to outperform, but probabilistically, it's too easy for me to be wrong. Things driving ETH, Ethereum, is the ETF that may be approved in May. Market is assigning right now a probability of 60% of that happening. I think it's too rich. I've been saying for quite a while that I think I expect basically that probability to increase into the date and eventually for that to be a flop. Why? Because based on having read the words of Gensler repeatedly, especially after his Bitcoin ETF approval statement, it is very clear that he's, to me at least, that he's extremely unlikely to vote in favor of an Ethereum ETF. Mm-hmm. And the vote for Bitcoin ETF was 3-2, and Gensler was the deciding vote. So I think it's quite unlikely based on that, or less likely than what the market expects.
So when you say that it's hard to tell which will outperform ETH or Bitcoin, you're talking about in the near term, I would assume, because do you see Ethereum having a role like you do Bitcoin being held by central banks as a reserve asset? I mean, how do you see ETH in, say, 10 years' time, especially considering that there's so many other, you could say, blockchain challenges?
I am extremely more bullish on Bitcoin long-term than ETH. Because of and this, by the way, this is a change until early 2023. For years, I was more bullish ETH, very much more bullish ETH, and my outlook, my view on ETH changed early last year, in March, in fact, around the banking crisis, and the issue with ETH is that it's all tech. That's the issue with ETH. It's tech. It's always going to be all tech. There will be better blockchains that can do what ETH does more efficiently, faster, and cheaper. This is almost guaranteed. I say it with such clarity. This will happen. When? I don't know. Who will do it? I don't know. I actually may want to. I'm trying to pick some horses there, which I cannot say the names, but they may not even be the winners. There may be somebody else that is to come in the future, but it will happen. Bitcoin, on the other hand, is an asset that it's about immutability. It doesn't need to evolve. It is what it is, and it works perfectly as it is. And on top of that, there is a wave of that became available recently because of an upgrade that happened in Bitcoin in late 22. There's a new wave of Bitcoin Layer 2s coming into the market that I think will drive, but maybe wrong, but will drive additional demand for Bitcoin. That being said, Bitcoin doesn't need anything else to do well. ETH, on the other hand, requires competitors not to emerge and take the spotlight away from it, which I think will happen at some point. In the meantime, last comment there is, usually when in doubt, I think the best way to think about ETH in relation to Bitcoin is leaving aside all the politics and leaving aside ideology and leaving aside what each does, and just think of ETH as slightly higher beta Bitcoin. That changes, but on average, if in doubt, that's usually the best approach.
Slightly higher, better Bitcoin?
Yeah.
Wow. How can you say that if you just said that you believe that Bitcoin will transcend, it'll be around in 10 years' time, ETH could be challenged by new and improved blockchain technologies? So
that's my view. I may be wrong. I'm saying, and that's a very long-term view. Like you're not going to make money betting on ETH dying in the short term.
Right.
Nor in the next year, nor in the next 24 months, maybe in 48 months, yeah.
Okay, so just to be clear here, your near-term position is you can make money on ETH, which could outperform Bitcoin from a trading perspective. But from a long-term perspective, you're far more confident that Bitcoin is going to be around than ETH in, say, 10, 15 years and maintaining a level of supremacy, if I may paraphrase that.
That's correct. Yeah.
All right.
Yeah.
Final thoughts. I know you like Solana as well. So if you have any other altcoins or other cryptocurrencies that you're interested in that you can share with us.
I'm happy to do that and basically talk my book. I usually refrain from naming names because it's what we in crypto call shilling. But happy to do that. I'm very bullish on Solana, not short term, because there is flows issues. Basically, the FTX state trying to unload a very large chunk of Sol off their books. So it makes sense for that to limit upside in the short term. I think the way I like Sol and like talking about Sol is aside the fact that I use ETH, and is the fact that it's one of the two chains aside of Bitcoin that actually has a proper, it's like a community it's a proper economy with economic actors. Most other chains as of now are mostly barren land where what you have is hot money flows coming in and out. There is no true sustaining economic activity yet. They're all trying to make it happen, but none has really succeeded yet. So Solana in that sense is unique as with ETH. Ethereum is one of the two chains with a proper functioning economy. And the thesis of Solana makes a lot of sense, basically. The Solana phone targeting retail, fast, cheap transactions. Now it's not my top pick doesn't yet exist. Like, for example, I'm very bullish Worldcoin. I think Worldcoin is going to evolve into, and the marketplace hates Worldcoin because it has a very high fully diluted valuation relative to market cap. But what Worldcoin is doing is onboarding the masses, and they're verified on-chain. And then eventually, I think what they're going to do is they're going to launch their own layer one, convert into a layer one, and then suddenly those verified users are extremely valuable.
Right.
Things I like Ondo, I like Filecoin, I like Arweave, I like Blockstacks. I'm just looking at my. There's too many names. Blockstacks, that's a Bitcoin layer 2. It's the market's preferred Bitcoin beta of choice right now is Blockstacks or Blockstack or Stacks. Core DAO, Celestia. I think Monad coming out later this year is going to be very, very big. That's a parallelized EVM. There's a lot of things coming up later this year. So most of the best performing assets, I don't think they yet exist in crypto. They're coming to the market, and that's something very common in the crypto space, where we tend to pick the new shinier things, and if not new and shiny, we stick to Bitcoin or ETH or Sol.
Right. Well, you made some very interesting points there. Worldcoin sent shivers down people's spines because for many it represents some kind of, dystopian future of control with a digital ID linked to a digital wallet, linked to a social credit system. So it does have some negative connotations in terms of how it could be, I suppose, abused in a system. Is that a concern that you care to weigh in on, without me elaborating too much into that, if you're understanding the gist of what I'm getting to here?
It is a concern. However, that's just one side of the coin. The other side is exactly the opposite. Is what having verified user does is addresses precisely one of the things the system dislikes about crypto so much. And it has a good reason for that dislike. The fact that we can have people with thousands and thousands of on-chain identities when it's actually one person, and each address, or wallet, as some people like to call it, each wallet can pretend to be a different person when actually it's all the same people. And that's bad for money laundering. That's bad for basically generally good business practices, because you don't really know if you have 100 users or if you have 10,000 users. It's generally a very negative thing. People in crypto like it a lot because they like to have multiple wallets, and they like to not have people know what they're doing. But you can argue that it's best from many points of views to have verified people on chain. When you know who they are, you know they're actual people. It's not an AI, or it's not 10 AIs or 100 people. So Worldcoin solves that. And one last comment before. Sorry, go ahead.
No, finish your thought, please, Alex.
If we think about how invasive the iris analysis is, yeah, that's true. However, we're all already doing that, or many of us already doing that with our phones. We already use our phones, and we unlock them with our faces. So why are you so scared about having your eyes scanned by an orb? Which is okay, it's an orb. So what?
Less about the biometric aspect of Worldcoin and more about the idea that you will have money that's controlled, that's linked to an ID, that's linked to a social credit score, that would remove the anonymity and privacy of spending that, and that could be used to get you canceled if you don't spend the money the way you're supposed to. I mean, it's a broader conversation. I hear your point, though. We'll have to have you back to dig into that deeper another time. But I do hear your point that we are going to need to have users verified in this age of deep fakes and bots and artificial AI. And it's going to become more and more of an issue to get people verified online with their currency, so forth and so on. So much to talk to you about, Alex. I'm afraid we're out of time for today. Very quickly, for our viewers that want to hear more from you, where can they find you? Where can they reach out to you?
Simply on X. My handle is Krüger Macro. My last name and macro is macroeconomics. That's the one way to find me.
All right. We will have to bring you back to unpack some of these other issues we just started to scratch the surface on. But thank you so much for joining us today and sharing your insights. We really appreciate it.
Thank you, Michelle. Thank you very much. Thank you.
All right. Alex Krüger, thank you. And as always, thank you for watching. Please make sure to subscribe if you are watching us on YouTube. From me, Michelle Makori, and the rest of the Kitco team, we'll see you next time.